Okay, so this is where we last left off. We just sold our furniture. Okay, so here's the next section here where it says, so it is now the next day. It's June 5th, Wednesday, and we end up renting from landlord's properties with the contract number 123654. Here's the contract here, right? We got a contract to for the address here, okay, and it's gonna be 2,500 square feet, okay. Okay, so here, uh, okay, so I got we gotta pay 4 months for $6,000, and then we have our rent deposit for 1,500, and in grand total we paid $7,500. Now in this case, I say we're gonna be using a check. Okay, so we're gonna be writing our very first check out to landlord properties. Okay. Um, so in this case, we paid for 4 months worth of rent and so on and so forth. So in this case, because we're paying for rent, right? So we're paying rent in advance, okay? Because we're paying for this month's rent and we're paying for 3 months worth of rent in advance. And we need to put a deposit for the rent place. So that's how much we are paying, is a grand total of 7,500. So in this case, I'm buying some rent. What is that going to be? What is that going to be considered? If I'm going to pay for rent for this month, what kind of account am I looking at? I'm buying, I'm paying for rent.
So yeah, expenses.
What kind of expense?
Rent expense.
Rent expense. Okay, good. For 62. That's only for the month of June. What about the other months?
We need to pay for every month.
Yeah, but we're paying for 4 months in advance.
Mm-hmm.
We're paying in grand total for 4 whole months. So what happens to those other 3 months? What are we paying into?
Mm.
We're making an advance payment for rent. So what we can consider that as a prepaid account, because it's like you're paying rent in advance, right? So in this case, we're going to consider that as a prepaid account. Now, I also have to pay a rent deposit. So what would that account fall under? What account would I use to represent my rent deposit?
So it's gonna be we just put it in an account and they could pull up the money when they need or the rent is come, like the due date.
Sure. Yes. but I'm talking about the deposit. The deposit's usually like a rent security deposit or something like that, where if something happens to the facility, they usually will take that money. Or for example, let's say you damaged a wall on their property, they can use that rent deposit to pay for the damages, or they can use that for an instance if you can't pay for a month of worth of rent, they can take that money, your deposit, and use it for a payment for the rent. So
Yes.
where would we cater?
Checking account.
Okay, that's for you paying for it, but my question is, how am I going to journalize that I have a rent deposit?
Like for the another 3 months.
No. So we already talked about the 3 months. Those 3 months are going to be considered prepaid rent, meaning you already paid in advance for 3 months, for a total 4 months of advance of rent, but you are paying 3 of those months ahead of time. Can you touch rent?
Rent, no.
No,
We
you.
just pay, yeah, for the land.
Yes. So in this case, we're going to consider that as a prepaid account. Okay, because you're making a prepayment towards rent. Okay, so that's, we already established that. But most rent places, most landlords rental places, they require a deposit to either hold the rental place to you, or for instances for emergencies. So we call this, what would you categorize having this rent deposit? How would I journalize a rent deposit?
Is it check?
No. You yes, you're going to spend the money, but the question is, how do you journalize a rent deposit? Can you touch your rent deposit?
No. So we don't journalize it.
Yes, we do. I'm asking you how. What account are you going to use to represent the rent deposit?
Checking account.
That's to pay for it.
Okay.
How do I buy a rent deposit? Right? You said you're going to use a check to pay for
Contract.
it.
Contract.
Okay.
Yeah. We do
So
the contract.
is there an account called contracts?
No. Like you mean debit or credit?
You need to first figure out the account first before you can use a debit and credit system. So what account would you use to represent the
Business account or checking account?
I'm not paying for it. I'm buying a deposit. How do I buy a deposit?
Is it payable?
No, you're not owing anybody money. You're paying somebody money right now.
Is it like purchase?
No. Gerard, okay, go back to square one. If a rent if a rental place is asking you to put a deposit down, right? Can you physically touch that deposit? Is that money something that you can touch? For instance, if they're using it for rent, can you touch rent?
No.
No. Can you touch damages?
Is it like it's not asset, it's equity?
It is not equity, it is an asset. Because you can't touch it, right? But do you own it? Does that person, if you paid the deposit to the landlord, don't you own that deposit?
Yeah. It's we said asset.
What kind of asset? What account would you use to represent the rent deposit?
I'm not very sure.
Read your chart of accounts.
What is account? Sorry.
Read your chart of accounts. The 7 steps of transaction analysis. Okay, you establish what to do. So now you need to use the chart of accounts to find what you're looking for. Okay, so you already know that you bought rent, you already know that you have some prepaid amount, and you already know that you're using your checking account. What about the rent deposit? What are you going to do with that?
This is like which chapter? I forgot.
I'm not asking you for any chapters. I'm asking you to read the chart of accounts. We're doing transaction analysis right now. You already established what you need to do. Now all you need to do is look at your chart of accounts to figure out, do you have the accounts you need to organize your transactions?
It's expenses, right?
You already established the rent expense.
Hello, can you hear me?
Yes, I can hear you, Stacy.
Okay. So it would be deposits or prepaid accounts. What are we doing?
Okay, so we already did the rent expense. We so we established that 3 months of rent is going to be considered a prepaid account because you're paying rent in advance. You can't touch that. You can't touch rent in advance. So it's a prepaid account. Now I'm right now I'm asking, what do you do with a rent deposit, because the landlord is also asking you to make a 1 whole month's worth of rent deposit for whatever reason that you need that deposit for.
So it would go in 18,700 the deposits.
It would go into the deposits, right? Because can you touch that money once you spend it?
No.
No, because it's the landlords. They can use it for whatever they need it for, right? Whether they need to use it for fixtures, right? Can you touch fixtures? No.
No.
Can you touch rent payment?
No.
No, you can't. So it's going to be considered an intangible asset where the deposits, right, is going to be used as a means to pay for something. Now, when I make this advance payment to the landlord, this deposit, right, is it yours? That means if something happens, you own that. You're going to tell the landlord, hey, I already paid you in advance. So therefore, you owe me the service.
And what is it that we pay for?
We're paying for rent.
Oh, okay. I thought
So
we were paying for like a prepaid deposit or something.
no, so so here we have landlord properties, right? We're trying to rent out the store location. So in this case, they require us to go into a contract where we're gonna pay 4 months in advance, plus they usually require a rent deposit.
This is the rent for the coffee cafe.
Correct.
Okay.
So we can operate our stores. So we already established that one of those months we're going to use it to start our company, right? So one of those months is going to be used for a rent expense. But 3 months, you can't use rent expense to represent all the months because you're not using it for the next 3 months. Okay, so we're going to consider that as a prepaid account because you made an advance payment for the next 3 months. So yes, how are you going to pay? You're going to pay with your checking account, right? You're going to write them a check because there's no way that you're going to have $7,000 in your hands. The proper way to do it is to write a check because you don't want to go to the bank to withdraw that money. You want to write a check. So we're going to be looking at a few things for the first time. So we have a rent expense, right, for the month of June. How do you know how much rent is? If you bought 4 months worth of rent for a total of $6,000, how much is 1 month's worth of rent?
1,500.
It's $1,500, right? And then, of course, after that, you bought 3 months of rent in advance. So that's 4,500. And then you had to deposit a month's worth in advance, or a month's worth of deposit for security reasons, in case one, you can't make the payment, two, something happens to the building and you need to make a payment to it. Okay, so that is what a deposit does. Okay, so now that we have established those three things and we're using our checking account to pay for it, right? Let's go ahead and try to figure out where all these accounts are. We already established that prepaid accounts is 18,600 and deposits is 18,700. Rent expense was 662,000 was rent expense. So there you go. I can go ahead and put this in here. Now in this case, right, we're gonna use the debit credit system, right? Am I increasing an expense or decreasing an expense for the first one? Rent expense. Am I increasing the expenditure for rent or decreasing it?
Increasing.
Increasing. So are you going to use a debit or credit?
Debit.
Debit for $1,500. Okay? Because we established that 1 month's rent is $1,500. Prepaid accounts, which is an intangible asset. Am I increasing it or decreasing it? We're going to increase it, right? Because we started out with zero advance payments. Now we have 3. So we are increasing our advance payments, right? We said it was $1,500 a month times the 3 months that we have in advance will give you $4,500. Okay? And we talked about the deposits, right? We have a rent deposit, right? Which you can't touch. So that's an intangible asset, but we own the deposit. So that means if the landlord does something to us, we can always combat it and bring out the contract and say, hey, I paid you for the deposit already. So 18,700. Okay, and it's usually about 1 month in advance, a 1 month's payment. So there you go. You have your $1,500 for the deposit. So in grand total, right, we said that we're going to pay them with our checking account, right? We're going to write them a check. So checking, which we already know exists, right? And we're going to pay a grand total of $7,500. Okay? So that's how much we paid to rent. Now there are a few things that we can do here, right? Let's go ahead and use our check register first because we cut them a check, so therefore we need to put it in our check register. So here we're going to use our check number check number 1501 here. Today is the 5th. We paid a total of $7,500. Okay. Okay. Who did we make a payment to? Landlord's properties. Okay. And why did we write this check? You could pay to pay rent. Okay. So go back to your journal because now we have the most important thing here is that we have a check number. This is very useful, especially when you're trying to keep track of where your money goes, right? Then that's where you can attach it to the description of this transaction here because then you know that that check is related to this transaction right here. Okay? Other things that we need to know here is, well, what was this rent who did you deal with when you were working with this rent? In this case, we were dealing with landlord's properties. Right? We had a contract number, right? It was number 12365654. Okay. And what did we do? We paid for 4 months rent and rent deposit. And how did we pay for it? We paid using check number 1501. Okay. So those are things that you can put into your description. Again, the description is based on whether the your description is based on how much information that you want to put in there. The more information that you have in here, the better your better understanding when other people look at your books, they know exactly what you're talking about. But if you leave it blank, then they're going to be like, okay, you paid rent, but who did you pay it to? When did you pay it to? And how much? Right? They're not going to know. Okay? So there you go. I filled out this right here. So now let's go ahead. So now I finished my journal. I already wrote my check out. So the next thing I got to do is go and enter in my ledger. Because now I spent money, so I need to update my checking account. I just bought some rent, so I need to go ahead and record that into my ledger. Okay, starting with your expenses. So you know that I just bought rent expense for the month of June. Okay, that's how much I spent to pay for rent in the month of June. Okay, so here's rent, June 5th, and you can say June rent. We're still on the first journal, and we just spent $1,500 to pay for the rent for June. Okay, let's see what else is next. We had some prepaid accounts, okay, because we made advance payments for some rent here. So let's see. It's going to be towards the bottom here. Here you go, prepaid accounts. Okay, we're going to establish that we paid advanced payment. So advanced payment 3 months rent, $1,500 per month. Okay. So journal 1, and we bought it for $4,500. Okay, so that's our first prepaid account. We also need to make note that we had a rent deposit, right? Rent deposit. And you could say 1 month's rent. Journal number 1, and we got it for $1,500. Okay. Last account we need to look at is going to be our checking account because we end up spending money. So this is why it's so important that you keep a good track record your uh, of your checking ledger, because this is how you're seeing where the money goes and where the money comes in, right? So in this case, I just wrote a check out, check number 1501, right? And you can always look up that check number and it's going to automatically tell you, right, that you just paid landlord properties for rent. Okay? So general journal 1, right? And we just spent money. We just spent $7,500. So that's going to decrease my checking account. So if I started with 23,625 and I just spent $7,500, that's going to give me a remainder of $16,125. Okay? Because I just spent $7,500 from my checking account. So I should now have a checking balance of $16,125. So that's the ledger. Okay? So now, because I dealt with an individual, right? I dealt with a vendor who's providing me rent. They're providing me a service. So I have to go ahead and update my subsidiary ledger, because now my subsidiary ledger is going to be, again, a list of all the people that are involved in my business. So in this case, who is operating my business with me? Well, Landlord Properties is the one who's helping me have my store location so that I'm able to sell my coffee. So in this case, that's what I got to do. I've got to look up for Landlord's Properties. So this should be in alphabetical order. Here you go, Landlord's Properties. Right? Date that you saw them was June 5th. Okay? What was the reason, or what the notes that you want to put here? Well, you could say that you bought 4 months of rent. Okay, $1,500 per month. Okay, you also had to put a rent deposit, which was $1,500, and you could also say you wrote a check, right? You wrote a check 1501, which proved that you did pay. The invoice number, right? Well, in this case, we didn't have an invoice number, but we did have a contract number, which was 123654, right? So what's so important about having this information in here? This shows that, 1, proof that I made a payment. 2, for any reason that the landlord starts to, do these, ask for things or demand things, right? You could pull up the contract and said, here, we signed it. I paid you with this check number. So, basically you can use your contract to file against your landlord in case they're claiming things that aren't true. So that's what's the purpose of this, is there is proof that a transaction has happened, right? Here is your proof that you have a contract number. This was with the agreement terms, and this is how you paid. You paid using check number 1501. So again, a lot of this is for also the protection of yourself, especially when you deal with like your vendors, and they're saying that you didn't pay, or they're just they're making claims that this is what you requested, or this is the things that you asked for. So here's an example of how you can keep your contracts and you can keep your receipts in a meaningful way to make it organized, so that you know that you have proof that a transaction has happened and that you did pay, or so on and so forth. Okay, so in this case, that's what there you go. Now, when did this transaction happen? It happened on the first journal page. Okay, did this landlord give you terms? Now, in this case, there's no way that they're going to be giving you any discounts on rent. So in this case, we could skip this section, the next three squares here. So again, terms, there is no term, so you don't have a discount due date or a actual due date. Now, again, because you made 3 months in advance payments, you won't have another due date until 4 months from now. So in this case, you don't need to worry this until the time comes when you need to renew your contract. Okay? Prepaid accounts. Okay, so in this case, what is this prepaid amount? You only use this prepaid amount if you have, before receiving service, right, you paid them in advance. In this case, no, right? Because you spoke with the landlord, you contracted them saying that you're going to make payments and you're going to pay for something in advance for the future. This isn't happening now. This isn't something that you purchase ahead of time. You purchased it now. So in this case, you do not need to use this prepaid amount column. What was the invoice amount? What did the contract say? That you owe a total of $7,500, and did you pay for it? Yes, you did with the check 1501. Okay? No discounts, no returns. It's going to be very difficult for you to return rent. Okay? So that's that there. Okay, so now I'm going to go ahead and do the calculations here, because this is also how you're able to make it easier for you to make sure whether you owe somebody or not. So as you can see, there's an accounts payable a column. So this is going to tell me, do I owe landlord properties money? In this case, this is what you're going to do. Okay? You're going to start off with your invoice amount. So this is how much they billed you for, or how much you agreed to owe. Okay? And things that affect these payments is going to be if you made any advance payments, if you returned something, or if you got a discount, or if you paid. So in this case, what we're going to do is we're going to subtract all of these amounts, okay? We're going to subtract our prepaid amounts, which is 0, right? Because we didn't make any advance payments prior, right? We're going to subtract any returns, but in this case, we don't have any returns, right? We're going to subtract any discounts that we could have had. In this case, no discounts at all, because, again, you won't be able to get any discounts for rent. However, we're going to subtract out our payments, because that is what reduces accounts payable, right? So that's the idea here, is what are you calculating to reduce the accounts payable? The accounts payable is going to be starting off with your invoice amount. Things that are going to decrease accounts payable is going to be your prepaid, returns, discounts, and payments. Okay? We know this in general for the general, right? We know that anything that goes towards a payment is going to reduce it. So that's the formula I plugged in here, is you're going to start with your invoice amount, subtract any prepaid, subtract any returns, subtract your discounts, subtract your payments. And that's going to give you your formula here. So this formula, you can apply it to all of the vendors here. So that means, because they're going to be using the same exact formula. So, but what we're going to see here is we're going to go ahead and view different, when we see other vendors, we're going to see how this formula will affect certain other vendors and how much you owe them. Okay, so in this case, because the contract said I owe them $7,500 and I paid them $7,500 with a check 1501, I don't owe them anything. Okay, so that's why my accounts payable is 0. So that is this here. Okay, so we just paid for rent and just used the subsidiary ledger for the first time. Okay. Now, it says here that we paid Kim Robinson, so it's the next day. Okay, we're on the same day, Wednesday, June 5th, Wednesday. We hired Kim Robinson to do some interior designing consultation. Okay, so in this case, we hired somebody to do a job. Now, for this instance, can I record this transaction?
Yes.
Why?
Did you say that the service was provided?
Well, in this case, we just hired her.
Oh, no.
Then no, because all we did was just hire her. Was there a formal business transaction? Did I actually spend money? Did she bill us? Do we know how much her services cost? In this case, we don't, because all we did was hire her. Did she complete the job? We don't know. It's a consultation, right? All we did was hire her. So in this case, this is something that we need to keep in mind, that when we see Kim Robinson's name again, we have to know that in our heads that, okay, well, we hired her for a reason. Why did you hire her? To do some interior designing consultations. So in this case, that's just stuff for us to keep in mind. Okay? All right. So the next thing that we did here is we went to Computers R Us store. So here is what we bought from that store. Okay. We bought so here's the store address. This is the sales receipt. Here we bought a computer system, which involves a computer and a printer. Here's the subtotal. So I bought the computer for $16.95 and the printer for $350. Here is the total cost. Here is some sales tax that you're charged because you're buying something from the store, so obligated to have to pay sales tax. And here's the total amount due, $2,213.71. And here it says on the receipt that you end up paying with a check number 1502. So, what is going to be, how are we going to journalize this? Right? First thing, what did we buy?
Computer and printer.
We bought a computer, and what else did we buy? Right? So we bought a computer, we bought a printer, and how did we buy it? How did we pay for it?
On the account?
Not on account. It says down here that we used check 1502.
Oh, we paid with.
We paid with checking. Okay, so there you go. We established what the transaction is. We sorted out our information. Now we need to use our chart of accounts to see if those exist. Do we have a computer in my list of assets?
Yes.
Yes. Okay, what account number?
1402.
Okay, and did we have a printer, right? For 14020, and of course we have our own checking account, so that's what we can do here. Okay, so we
I will be like going to use the bathroom and come back. Okay.
okay, we're about to end class soon, so computer and printer, and we said that we paid using our checking account with a check. Okay? So 14,010, 14,020, and 10,100. Okay? So I know for a fact that I spent $2,213.71, right? Now in this case, right, how much did I buy my printer for?
350.
Oh, that's my printer. Okay, so $350. How much did I buy my print for my computer?
$16.95.
Okay. Now, if I add these two numbers up together, right, I'm only going to get a total of $2,045, which is my subtotal. What do I do with this tax that I was charged? What am I going to do with that sales tax that I had to pay?
Aren't we supposed to journalize that also?
How are you going to journalize that? As a separate thing or as
Sales tax.
sales tax? Do we have a sales tax account?
Not sure. Do we?
So if I go to my chart of accounts, right, I'm going to tell you this. No, there is no sales tax account except for a sales tax payable. But what does a sales tax payable tell you? Why am I owing the government when I'm paying the government right now?
I'm sorry, I can't hear you. What was that?
So what is sales tax payable? It's a liability, right? It means I'm owing money, right? So why am I owing the government money when I'm paying them right now?
Huh.
So remember, this one is only for when you're collecting money for sales.
Okay.
So there is no sales tax. Now, what kind of asset did you buy? What is a computer? What is a printer? What kind of assets are those?
Fixed.
They're fixed. So what is included in the part of the fixed asset?
Depreciation.
Okay, we'll talk about that later on, but we're talking about including the cost. So you're on the right track if you're talking about this is dealing with depreciation. Yes, because you need to figure out how much the asset costs, right? So what is going to be considered part of the cost of the asset?
Tax.
Tax, correct. So where is this tax money going? It's going to be distributed amongst the two items that you bought. Okay? Now, how do you split tax? How do you split tax?
Just do the calculations of each one and the percentage of the tax.
Good. So in this case, so 1695 and you have the 350, right? You said you're going to multiply the tax, right? So let's go ahead and calculate that real quick. What happens when I need to calculate the tax on that? Okay, so how much is tax? Tax is 8.25%. So we're going to times this by 8.25%. Okay, and we're going to times this by 8.25%. So I get 139.80. So I get 13983 and I get 28875. Okay? So let's see. how much am I going to charge? So in this case, it's going to be 139.83.8. So what are you going to do with that 3? Are you going to increase it or decrease it? Okay, so let's try that again. So in this case, we're gonna increase it because the 8 after the 3 is gonna make the 3 go up a penny, right? So this is 139.84. And in this case, 28,875. So 28,875 is gonna give you $28.88. Now let's take a look at the tax here. If I do that, my tax is actually too much, right? I have a tax of $168.72. Can I have that because did I pay 2013.72? No, I didn't. I paid 2,213.71. So where is that penny going to go into place? This is where we have to consider and do our math again. So let's expand this again, right? Let's redo this again. Right? We know for a fact that this is the numbers here. Now in this case, usually, let's see, is an eighth of a penny more than half of a penny? 100%, right? An 80% of a penny is definitely more than 50% of a penny. So you would probably most likely distribute it over here, that penny over here. Now, other things and other rules and regulations is here's an easier way to think about it. Usually your more expensive item is going to get the most tax, right? Because it's based on a percentage. So in this case, you could have just assumed this as well, where, okay, my computer's the most expensive, so I'm just going to put the penny there. Yes, that's completely invalid because you're going to end up paying more taxes towards the more expensive item than you would for the less expensive item. So in this case, I would make my decision and say, hey, I'm going to make this 138.84 and leave this one at 28.87, right? Not round up. I'm going to keep it the way it is. So then there you go. Now I get 178.71 to get me my grand total of 2213.71. So in this case, these are my new grand totals for my computer. So my computer is now going to be, right, got to add these all up to get my totals here. So I get a computer, right, that's going to be a total of $1834.84. And my printer is $378.87. Now I get my grand total to be $2,213.71, which is exactly written on my receipt. They all match up. Okay? So here's a few things I got to do first. I got to go write my check out first because I already paid them. They already took my check, so I need to make sure that I update my check register to make sure that I, just to make sure it clears through. How much did I write the check out for? For $2,013.71. Who did I write this out to? We went to Computers R Us. Okay? And why did you go there? You bought a computer system. Okay? So then let's see. So now that I actually spent the checking, right, for 1502, then I have everything I need for my description. So the first thing is, who did you buy this computer system from? Well, we purchased them from Computers R Us. Okay? What's the proof that this transaction has occurred? Well, we have a sales receipt number. So sales receipt number, right? 84143. So that's proof that we bought something, okay? Because we have the receipt number. And we bought and we paid using check 1502, right? To further say that we paid for what we bought. Okay? And now we are done with my journal. Okay? So, once again, now that I finished my journal, I need to now update it to my subsidiary ledger. Okay? So, my or general ledger first, and then we can do subsidiary ledger second. So, ledger, because we spent money. So, we need to update that. But we also acquired some fixed asset. We bought some fixed assets. So, in this case, I'm going to locate my computer because I just bought it. Okay, so office equipment, here it is. I bought a computer, right? The computer. So you could say it cost me, so price was $16.95 plus 8.25% tax, which gave you a total of $139.84, right? So you know how much money the item is plus the tax. Okay, we're still on our first journal, and so that therefore our total that our computer ended up being was a total of 1834.84, right? And that's going to be like that. So that means when we do depreciate my asset, right, I need to use this asset cost, which includes the sales tax price. Okay. Your printer. You had a question?
Yeah. So for example, how your this is the ledger, the journal,
This is the ledger.
the one that we're doing right now.
Yes.
Okay, so for like the ledger, for example, we start like how we're starting for our business. Um, will we already be provided the ledger with all the categories like computer and
Yes.
everything else?
Everything is there.
Okay, so we're just filling it out.
You're just filling it out. Yes. I'm not going to require you to spend all that time just to build your tables. It's already done for you.
I know, but like for example, let's say just working for an actual business, will they provide that for us also, or would we have to be the ones to do that?
It depends on what if you're working for another company, you're most likely going to be not having a bunch of Excel spreadsheets. You're probably going to be given like a QuickBooks account. So no, you wouldn't be necessarily needing to do this. What I'm teaching you is manual bookkeeping. So you understand how the flow of transactions, how do we use the general ledger, and how, the softwares that we use do the math for you behind the scenes. But usually, yes, if you are doing manual bookkeeping for a company, they should 100% provide you everything that you need because you're not the accountant. Remember, you're just whatever you're applying for, you're just the bookkeeper. But if you are applying for the accountant's position, they will give you what you need. Like, for example, the accounts. So the chart of accounts, or they'll say, hey, just create a chart of account based on what you think that you need. And then when you go from there, that's where you start building your tables on how you think it's the best way to organize a business transaction. So this is just, it's not, I wouldn't say this is necessary for every business, but it's definitely a start of how you can get yourself organized.
Okay, thank you.
So there you go. So you got the computer, we got to do the printer now, right? So we bought the printer, was $350, okay, plus the 8.25% tax, which gave us, how much did it give us? It's like $28, right? $28.87. Okay, so then that should give me a grand total of the $378.87. So however you journalize it, you journalize as you debited this. So therefore, it's also going to be a debit balance. Okay. Last but not least, we wrote a check out. So therefore, we got to go all the way up to the top because now we got to update our checking account because I just spent more money. So in this case, you only need to have just the check number because you could always use that as a reference to look into your checkbook to find out, oh, I did write a check. And when I look at that check number, it should tell you the date, should tell you the amount, should tell you who did you wrote it for and why did you write that. So in this case, this is enough information to be very useful, right? It's a good reference point there. And we're still on the first journal page because that's where our transaction is recorded. And we end up spending money. We end up spending $2,213.71, which we credited from our account because we end up spending that money. So therefore, again, if you put your formula in here, it should automatically calculate for you saying that you spent $2,213.71, which should give you now a new balance of $13,911.29 left in your checking account. Okay. So there you go. I updated my journal. I updated my ledger. So the last thing I got to do is, well, for any reason that you need to return your computer, you need to plug it into your subsidiary ledger so then you can go ahead and have the proof that you paid for something and you have the proof of the receipt. So let's go to the ledger. We're under vendors and we're going to look for computers are us. Here they are. Computers are us. And we're going to put in the date, right, which was today. Now, this is what you could do. You said you bought the computer, okay, and it got you a grand total of $18,834.84, that which includes the tax. Plus, you bought the printer, okay, for $378.87, right? And you also paid using check number 1502. Okay? So this is good information because when you plug in things like this, right? So let's say you plugged in your printer and all of a sudden it keeps giving you system failure and it just won't print anything out, right? You can always take it back and return the product. And when you return the product, this should be the amount that you should be getting back, making it that much more easier so you don't have to actually go back in there, recalculate how much it is, recalculate how much tax it is. So in this case, when we do that, at least it saves you some time. So if you do, in case you do return the product, at least you know how much you're going to get back. All right? At least you know exactly what you bought and exactly how you're going to get the money back. Now, in this case, what was the invoice? So in this case, we got a sales receipt. The sales receipt number was the 84143. So this is proof that a transaction has occurred, but this is also the proof of the receipt that you need to have in order for you to we're on the subsidiary line. That's the proof of the receipt that you need to have so that you can return the product. Okay. All right, post reference. We're still in the first journal. Now, in this case, terms. There was no terms because you paid at time of service. So in this case, this wasn't like you had it on an account. So in this case, you paid it right then and there. Now, how much was the receipt amount? It was for $2,213.71. And did you pay for it? Yes, you did. You paid for the full amount. So once again, you're going to go ahead and do that formula once again because this is going to tell you how much you actually owe, um, uh, how much you owe Computers R Us, and this is going to tell you how much, basically how much you owe. So in this case, again, we're going to start with our invoice amount, and things that decrease our accounts payable is going to be your prepaid minus your returns minus your discounts minus your payments. Okay. Now, for any reason you end up getting a refund, okay? Let's say I return the product, okay? So if I return the product, let's say I return my printer, right? And I end up getting that, that $378.87 refund, right? Because I made the formula, the way I formulated it, right? If I were to plug in something in here and drag that formula down, now it says that that I am owed $378.87. Not that I have to pay for it, right? It says that someone owes me because it's negative. So that's what it means here is that when you do buy something, right, and you do the formula, this is how it works. So let's say I didn't pay for it, right? Now it tells me that I owe $2,213.71. But if I decide to make that payment now, right, then it will say that it subtracts this, and what in the gray is supposed to be your total amount that you owe overall amongst all your bills. It's going to now tell me that I owe nothing. But if I didn't pay, it's going to say I owe $2,213.71. But in this case, we paid at time of service. So in this case, we made a payment. So now I owe Computers R Us nothing. Okay. So that's how we use the subsidiary ledger. All right. So we wrote our check. We got a subsidiary ledger. So what I'm going to do is we're going to stop here for now. Okay. So that means when we come back, we're going to continue on with this payment here. Okay. For next week. Okay, so important things you want to do is you want to save these. Is if you're using Excel, you are going to be constantly using them over and over and over again. So these worksheets and spreadsheets are meant for the reason for you to continue on and on and on. If you're using the Word document, we take the pages and we use them as we go. So again, yes. Right? Any questions?